Hello, everyone. How's everyone doing? Alexander, LZ, Trading Cable. Hello, Ingmar. Let's take a look at some of the markets here. Okay. ALD, there you go. You get an alert on pound. So I wanted to start off with copper because up here, Blake was bearish everything that day. So when I showed him the copper up here, he said, sell it. Hello, Jamie. And as you can see, we're breaking the neckline right now. So it was a pretty good idea at 460. Don't you think? Give me a why. Anyone on it? No, we don't talk about copper a lot. It's a pretty big formation. It's going to take it well under $4. 380, 360 possible objective. As long as we don't have another one of those false breakdowns, which, false breakouts you have to be aware of all the time. And then yesterday I had a little bit of a debate from one of the attendees when I said that we were going to head up and take out this double top in the Dixie at 93.19. We haven't done it yet. So I still think we will. 93.50 is my number. See if that happens. And perhaps what we're going to get, or maybe it's already developing, as some type of low in euro. Okay. And cable's outperforming. But I'm not ready yet to pull the trigger. Also, I talked about a nice rally that should develop up towards 110 in US dollar yen when we were down here yesterday. Anyone catch that? Okay. And we'll see what happens here with the metals. Gold's run into a little bit of a brick wall at the breakdown at 1794. I'd look at maybe 1750.40 for if you're short to cover and maybe get long. Gold still looking better than silver on the gold silver ratio right here. And I'm kind of tempted in Canada for a short up here because yesterday the turnaround Tuesday idea was crude oil. And even though we had risk off pretty much most of the day yesterday, crude still has not made a new low. It's still holding this triangle low and now trying to reverse. Maybe we could break out to the upside on this triangle. S&Ps took out the Kabul low. Okay, and whether or not we get one more new high or not, you ever hear the expression that markets top with violence? And these have been pretty violent swings that we've been having for a while. So, it was pretty orderly and starting to get a little wild here. And that's right. And markets bottom and silent. So still think we're in a topping mode. Is this it? Or could we get one more blast to the upside? I don't know. It's starting to lose momentum. The dip buyers are not as successful. They weren't as successful as they were the day before, where they were able to drive the market to new high. Perhaps this is just a correction here and just a correction here. If we start taking out 14.9 in NASDAQ and the NASDAQ 100, we'll have a breakdown. So we already have kind of a heavy week going on. I think we're underneath the 2-week off number, or it's right here, 15,010. So I don't know, when I say I didn't have a bias and I looked at a chart like this and you looked at a chart like this, is this the kind of market you would buy? Okay, nat gas looking good, Amira. So here's that 14.9 level. We get through that. The next major level is 14.4, which will take it back inside the throw over. It'll negate the breakout under 14.4. So that's really the area that's going to tell you that you have a top, because once you're back in here, you activate wedge lines and megaphone lines and everything like that. So I think that's about all I was going to cover for now. Yeah, that's it. So still think the dollar's not done. It's got to clean out these 93.20 stops. Good morning, Stell. Are you here?
Hello, Coach. Hi, everybody.
Hey, buddy. So
How's it
anything
going?
happen? Anything happen overseas?
Well, we had the RBNZ,
Oh,
which
that's right.
was had been expected to hike for a while, and then yesterday, suddenly, with this new lockdown over a case or one or two or three cases of COVID,
Yeah.
whatever it was, people suddenly got scared and said, "Oh, they're not going to hike." Well, they didn't hike, but.
Huh.
They didn't hike, and that's why the Kiwi yesterday before the RBNZ was down 1.5% against the dollar or something like that. So it was kind of pricing it already. So they didn't hike, but Orr said that we're not hiking for now. So it's kind of they're pushing it further back towards the closer to the end of the year, maybe next meeting or the meeting after. But this was more a let's wait and see. We're a bit cautious due to this lockdown and what's going to happen. So for now, we're not tightening, but we're going to be tightening before year end.
Yeah,
that's what they're saying.
And anyone that tried to front run that news thinking they were going to hike got hammered before the announcement anyway.
Yeah, and interestingly, the Kiwi dollar is now hovering near the lows. It actually broke the previous lows, which were
there
in July. Yeah. Yep, it broke intraday. Now it's back near those lows, and it does look vulnerable, in my opinion. So that was the main event, really, of the last few hours. We did get a few other pieces of data as well, but really that was the main one. I think it was Blake's chart of the day, or was it yesterday? The Kiwi dollar, anyway. So there was a lot of interest on that. We did get some CPI readings from the UK, 2% year on year. This was lower than expected. We're expecting 2.3 and 2.2% year on year for the Eurozone. So that's the highest reading in quite a while, and the first one above target. Worth noting that PPI input in the UK was a lot higher than expected. So it's almost 5% year on year. So, producer prices are going up. Producers are not going to take it on the chin. I'm sure they're going to pass on some of these this inflation, basically, though, in terms of prices. So, we're not out of the woods yet by any means in terms of inflation and the way it's heading. But we still don't have a rate hike. We're all expecting the RBNZ. They're going to probably do it later this year. Norges Bank the same. And we have FOMC meeting minutes later today. So that's going to be interesting.
Okay.
But I think the bottom line is still, markets are very choppy. Yields are not doing much. Equities are unchanged to slightly higher the usual. And we're just going to have to wait out these next 9 days until Jackson Hole.
Yeah, what is interesting is if the euro and, Grega was here yesterday saying that, I don't know, between here and maybe 1640 will complete something here. I think a C wave, and then we'll get a rally, but the relative strength is the pound. As you see, we took out the lows in euro for quite some time, and look at cable. Looks like more of a retrace after the initial bounce. So cable looking still much better than euro. Probably still the preferred long, as I don't know. I think it's kind of constructive if euro maybe makes another low or so that EG doesn't. That's kind of interesting, even though the cable looks better. But if euro makes a new low and EG holds, that would be another market message to me about getting long euro. So
yeah, could be. I think we're consolidating in euro pound. I still think we're going to see 83 handle, which is I think it's going to be drawn like a magnet to that eventually. But at the moment, there's there's no clear direction for me.
Well, there's no one. I don't think there's too many people long anymore after taking out these lows. I mean, maybe fresh longs are coming in, but they got all the stops here anyway. So we'll see what happens there. Sure. Should we call in the general?
The boss?
The general Blake Morrow?
General. You know what's funny? Good morning, guys. How you doing?
Good morning.
Hey, buddy.
Speaking of which, this is actually really crazy. I can't connect my phone to this webinar. Well, I could, but so I was for those of you that don't know, my mother is moving back into my actually our traders at Forex Analytics would know this because I've talked a little bit about this. My mother's moving back into my hometown. And we haven't lived in the same city for 20 years, so I'm actually really excited to help her move. And I'm actually going to fly out, help her finish up some things at her house for a couple of days. And then I'm coming back, but
nice.
But yeah, it'll be nice. I'm super excited. It's been so many years since we've been in the same town, and I got a lot of time to catch. A lot of catching up to do. A lot of anyway. At the same time, I'm going to visit a friend of mine who I was in the military with. That last time I saw him was in 1994. So
wow,
yeah, but
reunions for you.
We were in Guam together. We were in Africa together. We were in California together. We were in Japan together. We were in Indonesia together. So we've spent, I've known him really well. Anyway, so he lives there in Northern California. So he went to visit a friend of ours that we had been in the military with, who just retired as a lieutenant colonel. And this guy's a guy that I've known since I was 18. And I was like, oh my God, he's a lieutenant colonel. And they just sent me a picture. And I'm like, oh, he ain't a general. But a lieutenant colonel. I was like,
yeah, you'll still have to take orders from him.
Yeah, I guess, anyway, so it's cool. I'm excited to see him because I haven't seen him since, the funny thing is when we were 18 years old, he had told me all about his girlfriend. When you're overseas, you talk about, the girls that you're dating, and he's like, yeah, this is my, my high school sweetheart. He married her. He's still married to her. So it's he had 2 kids with her that are same age as my kids. So it's cool. It's cool. I get to meet her, and to me, if she feels like kind of like a sister, because I've known all about her for most of my life. So anyway,
so you're driving back in a big U-Haul or something with your mom?
I am driving one of their vehicles back. Yeah.
Oh, okay.
Yeah. I mean, it's 15 hours away, and I'm like, sure, I'll, why not? I'll help you out. Of course, it's like, I don't mind driving. It's no big deal to me. I'm like a lot of people when they drive, it's like after about 8 hours, I get really tired. I just pull over on the side of the road and fall asleep for 30 minutes, and I get back up and start going again. So it's no big deal. Anyway, you see,
it's my fault.
Very long story because it's summer and we're in the Forex market and it's summer. All like literally, I want to say 2/3 of our traders right now in the Forex Analytics community are
on vacation.
Yeah, most of the Europeans are gone. Ryan from Forex Flow is out. Amanda's out. Steve is on holiday, even though he's still tries to get in and broadcast a little bit. I mean, and there's Amir just popped in. I mean, right now we have 57 people online. Usually we're in the 90s. So it just shows you how low.
The markets are acting like there's only half participants. And,
you look at currencies. When I got up this morning, I'll just give you an example. I bought last night, I bought the Aussie yen. I bought the Aussie yen following the RBNZ. Now I know you're probably thinking, oh, well, why'd you buy the Aussie yen? I'm like, well, if New Zealand, as Stelios pointed out, they didn't raise their rates, and the markets have to take that as a cue, right? If you're in Asia, you're like, oh crap, here goes the central bank not actually raising rates. That's good, right? It's good for risk. It's not bad for risk. It's bad for risk when every central bank starts tightening. But, I'm like, okay, well, at least risk appetite will probably be supported going into, Europe. So I'm like, okay, I'll buy some Aussie yen. I bought Aussie yen last night right here at 79.40.44, I think is where I bought it, if I'm not mistaken. I sold it this morning at 51, like right there. But nothing moved. I mean, when you got this like super, I was playing this false breakdown in the Aussie yen following the RBNZ, because, you might ask me, why didn't I buy the New Zealand dollar? Because regardless, what they did is they actually didn't raise rates, and the markets were prepared for the RBNZ to raise rates. So there's going to be position adjustments from institutional positioning adjustments overnight, but it was going to help risk appetite, I thought. I figured, and stocks bounced a little bit overnight, but overall you look at Europe and it's just flat. But here's what's happening, and I want to talk a little bit about it today. The euro is probing this 117 level. I thought they were going to push these stops below 117 last night in Asia, but you know what's developed here? What do you guys see? Anybody see anything? What do you see? Stelios, what do you see?
Here.
Shohan says, I'm on vacation in Europe, but here. That's funny. Shohan, how are you, by the way? And Irina says, I'm also on holiday. See, Irina's always in our chat room too, and she's on holiday, yet she's listening in right now.
I personally see on the euro dollar 2 very bearish candles, then some kind of a consolidation. What is it, the bearish flag or something? What? And then we keep going.
You're not very good at drawing, are you?
Double bottom.
You're just not good at drawing.
Could be a double bottom.
You're like one of those kids that didn't do well in art class, right?
Yeah, you're right.
I was very good with Venus.
By the way, Irina, she goes, Irina, yes, hello, Blake. And then Shohan says, Blake, hope you're doing well. Hey guys, I miss both of you in the chat rooms right now. Just saying hello. I know you guys are on holiday and you're listening into the webinar, which is cool. I'm glad you're here, but miss you guys. So
you think there's a bear flag?
There you go.
All right, now we know.
See, now if you guys were just a little bit more creative with your,
that is what he said. It was consolidation, which a flag is.
Bearish flag, bear flag. Yeah. I mean, come
on. You did? Oh, you know what? I only hear what I want.
Go to the recording.
Hear what I want to hear.
Go to the recording afterwards. You'll see it.
I only hear what I want to hear. Okay.
I said bearish flag. Bear flag.
I only hear what I want to hear. If I'm trying to get something out of Stelios, I just want to hear what I want to hear. Okay. Anyway. You said a bear flag. That's good. But you know what that leads us to is the euro dollar. If it does break down, it breaks down on the 161% extension, enough to get out every long. So I've been talking about, maybe it's just in my own head. I've been talking about trying to buy the euro down here at 116.60 because it's 161% extension, because it's below the long-term 38% retracement, because there's a lot of support down here, but it was enough to actually trigger every seller or every buyer in the market trigger their stops. But this was last week. I talked about that last week. And now that we're here, I don't know if I'm ballsy enough to get long the euro down there. But what I would be thinking is I don't know if I'm short the euro, which I might get short the euro here this morning. If I short the euro, I do want to be covering some of it down there. So that's on a breakdown, because I'm more concerned that the euro is going to give us a false breakdown in this environment. When I say this environment, I say when stocks are moving straight up. Yes, we came off yesterday a little bit, but have we disrupted the bullish trend of equities? No. So when you're in this very bullish trend in the equity markets, I do worry a little bit about the euro giving some false breakdowns, or the dollar index, if you will, giving some false breakouts. And you can see this bullish wedge in the dollar index. Now, one other thing I want to talk about, and Stelios, if you want to add a little bit here regarding inflationary data.
No, you hurt my feelings before. I'm not adding in.
I'm so good at hurting feelings. That's because I don't care. I'm just kidding.
Very sadistic, Blake.
I am. No, I was looking at the dollar Canadian, and
you're like Bobby Axelrod in Billions. He says, "I am a monster."
Dude, that guy's awesome. By the way, Billions is starting. You know the thing about Billions, and the reason why I love that show is because it's so gray between who's bad, who's good, and who's evil, or like is life. Just everybody evil? Because you're like, do I root for the good guys, or do I root for the bad guys, or are the bad guys really the good guys and the good guys really the bad guys? That's what I love
about
bad
guys and bad guys.
Do you know what I liked about Billions? I liked how the characters, they're very close to the truth. So I used to speak to quite a few hedge fund managers and big boys when I was a market maker, and the attitude and the way they speak is very similar. They quote it really well in Billions. Like Axelrod is a very good character. It's very realistic. Show. Yeah.
One of the producers of that show is Andrew Ross Sorkin.
Yeah.
He's one of the CNBC guys, right?
Yeah.
He's also he's been around the block for many years, actually, as young as he is, as a journalist. But anyway, but he is very accomplished. And the thing is I mean, I think anybody who's in the financial industry loves that show too. I mean, everybody that's watched it, that's been like in our chat rooms, I'm like, watch it. So great. Anyway, new season coming out actually here in the next, I think it's in the next couple of weeks, if I'm not mistaken.
Yeah. He's the 21st century Gordon Gekko.
Yeah, exactly. He is. Okay, so here's the dollar Canadian. We were talking about the dollar Canadian underperforming yesterday, but it did break 126. But I had to point out that, despite the Aussie being so weak, the Kiwi has actually done better up until yesterday, excuse me, but the Aussie's been so weak, the dollar Canadian just hasn't really broken out. But we're stalling ahead of this 618 retracement. If you use Forex analytics, very well about the 618 retracement, and we've been talking about that for like basically in nauseum, and just but we are above the 200-day moving average now, and that's something to take note. But that 126.60, let's call it 126.65, previous support actually right there as well. Let me grab another line here so you can see it. Then I'm going to remove it. That right there, in the event that we get some weaker Canadian inflationary data, that could allow for the dollar Canadian to rally. I have to point out that inflationary pressures are prevalent in the US. They're not as prevalent in other countries. And in Canada, I mean, you guys, there's those of you that live in Canada, you're like, whoa, no, we got inflation. I understand you do. And you're going to get some overflow, if you will, from the US. But there was a really good chart that was posted by, I forget what analyst. I have to go back and look. I actually retweeted it. It was like last week. When you look at inflation numbers, globally, the US is up there, obviously because of all the stimulus that's been provided here in the US by the Federal Reserve. But inflationary pressures are more prevalent here than most places. So, if the dollar, if Canadian, it seems like Canadian inflationary pressures recede a little bit, I would be looking for this dollar Canadian to possibly break out above this 126.60 level. I think that's, it might play a little catch up to a very weak Aussie dollar, which, by the way, the Aussie has broken lower in case you missed it yesterday. Kiwi dollar is trying to break lower. We are, as Stelios pointed out, we're at, trend lows here. And you can actually take that. And remember, people have been buying the Kiwi for weeks based on the RBNZ raising rates, which they didn't do yesterday. So just because they're going to raise rates now or moving forward, the market still has to reprice the Kiwi, and that's why it's trading so heavy now. And you know, a little bit of catch up.
Looks like it took out stops from about a month ago and reversed.
It did, but you know, I think now what opens the door, and I think a lot of people need to realize, is that if stocks do come down from here, remember, stocks are obviously very bullish, but if and everybody knows that this is the support that I'm looking at and have been since before we hit there, you know, back here on July, you can just go watch, you know, this show on July 23rd.
Plus you have the wedge line and the horizontal line meeting, intersecting at that level.
Correct. And so at this level, you're absolutely right, Dale. If we break basically 4,400 in the S&P, stocks are going to be toast, or, you know, we'll finally get a, you know,
vulnerable,
a little bit correction, you know, maybe a 5% correction or whatever. But should we see a correction like that, the Kiwi is now not off limits for me to short. So I've been really hesitant about shorting the Kiwi, you know, through most of this, because I knew the RBNZ was more hawkish, and, you know, people were treating it as such. You know, now as of yesterday, yeah, I don't mind selling Kiwi on a risk off type of move if we ever get one, but that's if. And you know, still, do you have any other comments that you want to make about the Canadian, about what's happening in Canada with inflationary pressures?
No, I mean, not really. I mean, inflation is predicted to go up to 3.4% year on year CPI, and it's still on the upside, and you know, it's going higher. And oil, remember, it's important for Canada, and oil is okay. It's down from the highs, but it's been galloping over the past months. So I don't think we're going to see, you know, anytime soon, a meaningful reversal of inflation. Okay, maybe we'll get a print which disappoints here and there, but I think the trend is still towards the high side, and I don't see what's going to stop that.
Yeah, and by the way, if you guys have Forex Analytics, your data flash is located right in the calendar right here. You can see the big blue button. This will give you data about as fast as you'll get it on Bloomberg. And we used to match it up here against a Bloomberg terminal for, you know, previous several years. As I would grab my Bloomberg charts and, you know, eco data, put them up against data flash. It's a nice little perk to have with Forex Analytics.
We had a nice little it was like a mini celebration whenever data flash was faster than Bloomberg.
No, seriously. Yeah. You're like, I mean, you know, that having Bloomberg for the years that I had it, I'm like, I know I underutilized the $2,800 it costs every month to pay for that damn thing.
Yeah. By the way, go on. So carry on.
Oh no, go ahead. I was just going to say, it's the feature I used the most was their economic data releases.
Yes.
And the thing is you get it with Forex Analytics. So with your subscription here, so make sure you use it.
I was going to say, our friend Anthony is saying that there's still major bottlenecks in shipping, and it's going to continue to get worse. And you know, I've said this for weeks now. I have friends in shipping, and they tell me the exact same thing, that this is not over. And you see all these big boys who know what they're doing, and they're ordering new ships and this, and you know, prices are going through the roof, and they're still at it. So this is not going away anytime soon, I think.
I don't know if I told you or I told and Dale may have heard this. My wife is ordering stuff from China, and the shipment, the quote was $10,000 in April. It's $18,000 today. So that's 4 months later.
Wow.
Yeah. I mean, that's just for her business, and that's just crazy, right?
A lot of businesses going through that. That's for sure.
Yeah. I mean, this is just literally in 4 months. I mean, that's just nuts.
Okay.
So anyway,
data in 3 seconds.
Yep.
Let's have a look.
And we have a lot of U.S. housing data too coming out.
Housing is mixed, very close. Oh, 3.7. You see, 3.7 CPI. So that's beating.
How come I didn't see that?
I saw that on. I saw that on investing.com. I have both open at the same time.
Oh, okay. So
weird. Okay.
what's going on here?
It's weird how the data gets disseminated. But anyway, core CPI I don't see yet, but CPI 3.7 year on year. It's a beat. U.S. housing data is mixed.
Dollar Canadian's coming off a little bit. Okay.
Yeah.
And look, these inflationary pressures. There you go. So core CPI. 0.6 month on month, 3.3 year on year. So that's higher as well. So you're seeing these pressures are still, inflationary pressures are still there. And the way supply chains are still disrupted, I don't see how this is going to reverse. And as I said before, you might get the odd reading here and there, but the trend is still higher.
Yeah, and those inflationary pressures, as you pointed out, I do not think they're going to go away either. And you know, this is the thing. We've lived for how many years? I mean, how many years have we lived with like, I can't even imagine. It's been so long since we've really felt any inflationary pressures, like for years, it feels like. I mean, since the financial crisis, really.
Well, in certain things like education and healthcare and stuff like that, that's going
on the day-to-day,
yeah.
Groceries.
Even though you compare what you used to buy, I always say this, you know, what did you used to buy with 50 euros when you went to the supermarket 10 years ago, and what do you buy now? My God, the difference is huge. So, you know, it's stealth inflation. You get it slowly, but it's there.
Yeah,
it is there.
All right. Well, hey, I got to pass it over to Dale because Dale's got an interview. And hey, guys, if you haven't tried out Forex Analytics, make sure you do so. You know, it's only $1 for 10 days, and then you could be involved in our community. Right now, you know, it's kind of slow in the markets, so this is a good time to kind of get acclimated with Forex Analytics. And also, if you got to visit our webinar sponsors. Go check out Forest Park FX. They are we've been partnered with them for years and years and years. And I got my first cashback rebate check. Actually, it's sitting on my desk. I was like, oh, I got a cashback rebate. Cause remember I had trade with JP Morgan for because I couldn't trade my personal account when I was with Gelos. I for years, you know, so I didn't get a rebate check, but I always told you guys, go get a rebate check. If you guys aren't getting cashback rebates, go open a account with Forest Park FX or connect your account with them. And if you're in Europe or the US, you know, you have to use this link right here. It says open account right here, but it's kind of cool. It's actually really cool. You know,
could also call the guys and they'll talk to you if you don't want.
Yeah, there's a link down here. You can chat with them on Skype, or there's an email. It says brokers@forexanalytics.com. They address those, and you'll talk to the guys in Florida. They've been with us through, you know, doing the Traders Summit events. You've heard them live on webinars, and they work with a lot of folks like Boris and Kathy, and you know, so they're great. They've been around for a long time. They're awesome. So
I invented a new tagline for them. You remember?
Oh yeah,
right?
you did.
Yeah, if your broker can't see the forest from the trees, contact Forest Park and they'll make it a picnic.
Ooh, look at that. You're crazy.
I should be in marketing. Yeah.
All right.
Anyway, all right. So good luck today in the comatose market, everybody.
John asked a check. I actually got a check from Chase Bank. It's the craziest thing. I typically throw away a lot of this stuff that I get in the mail, and John says I get it through PayPal. Yeah, I mean, you know, but maybe it's because I'm US based. That's probably the reason why.
Well, now you have gas money for your trip.
Yeah, there we go. See you guys.
All right, Blake. All right, Stel. Thank you, guys. And Larry Tentarelli, the long-term bull. Welcome back.
Good morning.
Welcome
good
back,
morning.
Larry.
Thank you.
It's good to hear your voice.
It's good to be heard, my friend.
Yeah, and I know you've been riding the bull as long as I've been talking to you here on Face. We're probably working on a year or two since we've been talking to each other, right?
Exactly. I was just thinking about that. It's over a year.
Cool. All right. Well, why don't you share your screen? And I have some questions for you because I haven't done this before, but I think we may be approaching a corrective, at least a corrective period. And so I'm going to ask you about your, I know you're going to show things and you look at your moving averages, what your money management exit strategies will be should I be guessing correctly in the next couple of weeks that things are going to start heading lower. I think most people think a 5 to 10% correction is reasonable. So, okay, let's start with the S&P.
Sure. And historically, a 5 to 10% correction is pretty reasonable. And I forget the stats. I think it's once a year on average, there's a 5 to 10% correction in the market. So, 3 to 5% is pretty customary. 5
We've
to
had
10%.
many of them.
Yeah, and it's not out of the ordinary in these longer term uptrends for that to happen. So, markets are volatile. Bond yields, I think bond yields and the Fed right now are the big wild card. And I've got to tell you, up until about 6 months ago, I didn't really pay attention to any of the Fed statements, FOMC, things like that. But I do now because the market moves so fast off what the Fed says. You really do have to keep your head on a swivel.
Yeah. And the swings, especially this week, where we had that big sell off because of Afghanistan on Monday, and it came back to close higher on the day, and then no follow through yesterday, gave most of that, gave even more of it back. To me, was kind of a negative sign that Monday at the close, it sure looked like we were going to have, a continuation move. So that didn't happen yesterday.
You're right. And I think a lot of people are just trying to get squared up ahead of the Fed today because nobody wants to get caught on the wrong side. I think right now I'm about 18% cash, which is, it's higher than average. I generally run 5 to 10%, but at 18%, I'm not, overly cautious. I've just taken some money off the table, booked some gains. I sold some of my weaker positions, but, not a major, I'm not if a 5 to 10% correction happens, it's just part of the market, but I'm not battening down the hatches right now. 4,200 to 4,250. So if you look on the S&P chart, so as long as the S&P stays over 42 to 4250, you can see there's a lot of support in that 4250 range. Here's 33, 57, 38. So as long as we stay over 42 to 4250, then I would just see any pullback, and that would be what, 5%.
Yeah.
Then I would see that as just a a corrective pullback. But a lot has to do with what happens with what the Fed says and what bond yields do, because bond yields definitely have been leading the bus right now. So I just wouldn't want to see any major volatility in bond yields, because a major move higher wouldn't be good for stocks overall if it was a quick move, and a quick move down would tell me that the market thinks there's a slowdown coming, and that wouldn't be great either. So I'd like to see bond yields hold over that 1.12 level.
Okay. And okay, so either or, the best case scenario for bond yields is sideways.
Exactly.
Okay.
I would say if it can stay over, let's call it 1.128 and 1.5. If it can stay somewhere in here, I think that's the best place to be. Anything outside of that, and I think the market wants to get repositioned.
Okay. So not too hot, not too cold.
Exactly.
You want the right kind, the porridge. Okay. Yep. So sector wise, what's happening for you?
I'll tell you what I've really been moving into a lot over the past 8 weeks or so is healthcare, and I've moved into it pretty strongly on the website.
Is that defensive, Larry?
It's a little bit of both. It's mid-cycle, so it's got some growth characteristics, but it is considered more defensive. And the thing about healthcare is it's really outside of this whole inflation cyclical debate, because these cyclical stocks, I mean, based on, what day, you can have a 5 or 10% move pretty quickly. So the thing that I like about healthcare is it's got some growth. It is defensive. And I think that regardless, to a degree, it's outside of this whole inflation debate. So, a couple positions.
Yeah.
So I've got Eli Lilly. That's had a nice breakout. I've got Regeneron. That's had a nice breakout, and that was trading higher pre-market. HCA, which is more in the, now HCA is much more defensive. They're in the
Like an
hospital side of it.
HMO?
No, I think they're a hospital provider.
Oh, okay.
So, they operate hospitals, is my understanding.
What
And
was
you can
that
see-
gap? Earnings? That
Yeah.
big gap up?
Yeah, that
Okay.
was right after earnings. But you can
All
see, I
right.
mean, if you just look at the uptrend, it's been pretty solid. So healthcare, there's a lot of other, like Dexcom is a little bit more of a growth oriented. This was after earnings, pulled back right into the 20-day. But overall, healthcare, we keep coming back to these FANG stocks, and I'll tell you what, the FANG stocks aren't exciting, but they just keep getting it done. If you look at Facebook, and if you look at how Facebook has held the 50-day, Google is probably the strongest of the FANG stocks that I don't own, and it's just held this 50-day. And every time I go to buy Google, something like Shopify will come up, or AMD, something that's a little more exciting, and then Google just keeps going. So I think these FANG stocks are still set up well.
Well, okay, you skipped one.
Which one?
Amazon.
I've got that one, and it's not doing too good. So,
No, okay. So, the surprise to me is Amazon was such a darling, and I don't know the percentage of market cap in the NASDAQ 100, but it barely budged the NASDAQ 100 with that weakness, and it still looks vulnerable to me. I think the highs are in for a while. So let me ask you this. I think the whole market hinges on Apple.
Okay.
And, Apple made a new high yesterday and reversed. And if we take out that 140, I think the market's in trouble.
Yeah, I think you're right on 140. I think you're right. And there's a lot of support right above 140. But no, I think you're right. Now, Apple, it did make a new high yesterday. It pulled back a little bit, the overall market. But like I say, in an FOMC week, it's pretty normal for people to, square up ahead of that. But
is it the largest market cap stock out there?
It is, yeah.
See, so that's that's going to be the ball game then, I think.
Yeah, and then I think Microsoft is number 2 at 2.2. But Microsoft, and I don't have Microsoft. And like I say, every time I look at these stocks, you think, okay, well, it's Microsoft. How much more can it go?
Right.
But Nvidia's been strong, Google, Microsoft, but Amazon's been weaker. I've got Amazon. I'm just going to have to ride it out for now unless they hit my stop. Amazon's pretty oversold. It's got about a 29 daily RSI, but it's still been weaker than I'd like to see it.
Yeah, you would think it would try and eat into the gap a little bit.
Yeah. I mean, it's got a ton of support down here, but it tried to break out here. They couldn't get it done, and it's just right back into the range.
Larry, what was your line in the sand in the S&Ps again? It's
4,200 to 4,250 in the near term.
Okay, thank you.
Yeah, so anything over that would just say to me, okay, normal correction. Anything below that would start to, raise a red flag for me.
Okay, got it. All right. Anything else? Utilities have been leading the way. But go ahead. You want to show the banks?
Yeah, I like the banks. So here's the thing. So bond yields are what? 127. So, where's the downside for bond yields? I think if
the double bottom.
Well, that's one place. But I think for whatever reason, if the market really started to smell out a slowdown, and if the Fed, here's the thing, and people get confused, if the Fed announces that they're going to start to tighten, people assume that bond yields go up. and they always don't. So if the Fed starts to tighten, that's generally considered that they're going to slow down the economy, which means that bond yields come down.
Yeah.
So I think that a lot of this move has been from the market starting to anticipate it. At some point, the Fed has to dial it back, but I think they're still going to stay with that, mid to late 22 target. So I think on the low side, bond yields could maybe come down to the 1% level.
Okay.
But at some point they got to start to head higher. And if you look at where we are at 127, I think there's a lot more upside in bond yields than there is downside. And I think that the banks, Wells Fargo's been the strongest of the majors. Then you've got Bank of America, but the brokers, and here's the key thing. So if you look at Goldman and if you look at Morgan Stanley, the key thing is that as bond yields started to come down, because bond yields topped out, what did we just look at in May, right?
Yeah.
Bond yields have been rolling over since May, but these banks and brokers actually showed some relative strength. And
They held up well.
Out. Yeah. And I mean, if Goldman's 7 times earnings and bond yields are, 1.20, then I think longer term. So I expect some choppiness today. But I think I like the banks.
Okay. All right. The higher yields would support banks, especially if it happens with yields widening, a steepening curve, right?
That would be the best scenario. If for some reason bond yields and the market's really having a tough time with it right now. And I saw a post today, wrong chart, but I saw a post today that the Bank of America came out and they said that they think yields could go to 2% or they could go to 1%. So basically Bank of America, and they're, as big as it gets, they basically said that they don't really have a strong read on where bond yields are going.
Yeah.
But, yields have rolled over, but then you take a look at Wells Fargo and it's broken out. So I think, 14 times earnings. I think that the banks at some point yields go higher, and I like the banks there.
Do you know what Bobby Axelrod is doing in the banking sector?
Bobby is, I'm waiting for that show to come back on. That's one of my favorite. I love that show.
Everyone loves it.
That's a great show. Yeah, Bobby Axelrod's the best. He would be a cool guy to hang out with.
Yeah, wouldn't it be? I'd like to work at X Capital for a while. Anyway.
Oh boy, yeah, sure.
Anyways, not that I don't love Forex analytics, but it'd be an experience to work with Dollar and all those guys. Anyway, kind of reminds me of the floor. Okay,
sure.
so Nucor, is that cyclical?
Oh yeah, Nucor is very cyclical. So I think the infrastructure, because obviously infrastructure, that's the big buzzword with all the progress that they made last week. And I've been watching these material stocks, I've been watching these industrials, and I think the steel stocks, for people that are looking to possibly trade, the infrastructure trade, I think it's through the domestic steel stocks. So Nucor, it's the biggest, and they're in the S&P 500. So the key thing with Nucor, it had this big breakout, is trying to figure out, at what. So I don't have Nucor. I've got it on my radar screen, and I know what I'm looking for. We'll just see. So Nucor's been more volatile.
You want to buy it at 112 at the previous highs, 110, 112, right?
Right around there would be ideal.
Okay.
If they could bring it right down around 110, 112, this 20-day would come up. Cleveland Cliffs, so they're smaller, but this uptrend has been easier to buy into, because basically anytime it's pulled back, like even where it is here, based on what your time frame is, anytime this is pulled back, it's been viable. That's a $12 billion market cap. Then you take a look at something like Caterpillar, and Caterpillar's a tough stock.
Looks ugly.
It's a tough stock. So if someone just uses the 200-day and they wanted to call the risk, 200 to 205, then you've got 4% of risk or so. But this is a tough chart. If I were looking at those big industrials, Deere is a much better chart.
Yeah.
Now they've got earnings coming up, so you don't know what's going to happen there. And I don't think of Deere. I think of Deere more as an agriculture stock, whereas Caterpillar, is the infrastructure. But deer,
So could China's slowdown be part of CAT's problems?
Sure. Yeah.
Okay.
Yeah. Absolutely.
All right. And anything, the precious metals took a hit. They got cheaper, GDX and some of the gold stocks.
I'm still
They don't
staying
look
away
ready
from
to
those.
me. Huh?
No, I'm still staying away from those. The one that had looked the best, Franco Nevada, as far as where it's trading on the chart versus all the moving averages. If I had to buy a gold stock tomorrow for the way that I run these trends, this would be the stock. Because if you look at that over 3 moving averages versus something like Barrick Gold, which is all the way down here. But the problem I think with the gold miners, and I've been doing this for a long time, I still can't figure out bond yields and gold miners, because for a while they were inversely correlated. Yields went up, miners went down, vice versa. But then we started seeing bond yields went down and gold miners went down. So I just, this is one of those, I just rather focus on, my tech stocks and my banks and the miners have been a tough read.
Anyway, I had a very interesting guess yesterday. Anything you like in natural gas equities? Anything you're doing there? Okay.
Not really. Southwestern's a tough chart. Range is a little bit better.
All right.
You see, the problem with this sector for me, this is a really volatile sector and it's great, but because I use, I run stops, it's just tough for me. I've been stopped out before in this sector a lot and then watched it go a lot higher. So I do still have XOP, but XOP is at the line in the sand right here. So the 200-day for me, I've been in this since last year. But I really want to, energies, a couple of these markets are tough to get a read on right now.
So the metals, the energy, copper doesn't look so good. The copper itself, maybe Freeport McMoran, is it reflecting it? There's copper.
Copper's tough. Freeport
looks like a big head and shoulders top. It's the copper.
It's a tough chart, and the Freeport chart, this is one that came. And I've had Freeport for a while now. It's starting to pull back here, but it held the 200-day. There's a lot of support that's in here, but Freeport really needs to break out over 40. And if they could get it over 40, but it's a tough market right now. These commodity stocks, they're just
they're taking a breather.
They are. I just hope that they can hold up. AMD is a stock that I like. So AMD was in this wide base for a very long time, broke out over 100. So I did not have it on the breakout, but I waited. I picked some up last week about 106 or so, right about where it is right now. But this big breakout over 100, if AMD, because it did a ton of volume. I mean, that's some real volume that came in. And AMD, even with this recent pullback in tech, it was up yesterday when Triple Q was down. But I think if they can keep AMD over 100, I think it's got some good potential.
You brought up Triple Q, and have you seen the commercials on television where people are watching a sporting event or something, and all of a sudden someone pops in and goes, "Oh no, I own Triple Qs. I own the QQQs." So it kind of reminds me of a Barron's cover. That they're out there promoting Triple Qs on ads, and it's fashionable. I own Triple Qs. It's the future of everything, and kind of reminds me of kind of a contrarian thing that they're promoting the Qs up here. How the Q here are the Qs. You'll like them as long as they hold above 344. 357.
And I'd like to see him hold the 50-day, for a shorter term position. But I think the key line in the sand there, just by looking at the chart, really 340.
Prior high.
340, 345, somewhere in this neighborhood.
Have you seen that commercial, Larry?
I don't think I have.
Okay, you'll notice it now.
Yeah,
that I brought it
I
up.
probably haven't. That's not as good as
I
the.
think they advertise it if you watch CNBC or CNN or anything. It's like, to be cool, you have to own the cues. So
Gotcha.
anyway,
Yeah.
So some nice looks there, Larry. I want people to be able to check you out, people that are listening now and listen later, so they could find you here.
Yep. So on Twitter, it's at LMT978, and then my website is bluechipdaily.com. And then I've got, if you want to go through and see, the posts that I make for members, what my technical analysis is behind it, things like that. This is really the meat and potatoes as far as my trend analysis and what I do.
Okay. So Larry, since I've been talking to Larry, has been long and right a lot of things. So, if you're, interested in equities, the blue chip, what's it called? The blue chip indicator or
Blue chip daily.
Daily. Okay.
Yeah. Blue chip daily.
Blue chips are better than red chips, right?
I think the red chips, I think overseas, the red chips are the big ones.
Oh, okay.
I think I haven't gambled overseas, but I think the red chips in Asia, I think I could be wrong, so I don't want to sound like a dummy.
Okay.
But
and you wanted to get what? Is this Seagate
yeah,
or C Limited?
So this is C Limited. So they're based out of Singapore. And if you look, this is really, so I own C. And to me, because everyone's focused on Alibaba and JD and Baidu, and these stocks are just really they're really bad uptrends.
Yeah.
And I'm out of all those stocks, but I'm still holding C. And if you look, they're right next door in Singapore, but
Okay.
it's a strong chart. I think they put up 150% revenue growth. It's a big, so if someone was looking for that corner of the market, I think C is the strong name there.
How about one look at Taiwan Semiconductor, which a lot of people are complaining about it being heavy, and there's a breakdown.
And I looked at this yesterday. That's cautionary. That break below the 200-day. Taiwan and there's a lot of things going on. I know there's a lot of political things that are going on. There's a shortage, but in either case, under that 200-day, for me, that's the big red flag.
Okay. Well, another great interview, Larry.
Dale, I always appreciate it.
Yeah, so very nice to have you. Thank you for having a giving spirit and bringing your hard work to us, the FACE community. And as always, Larry, I root for you and your subscribers to clean up.
Thank you.
In the days and weeks ahead, buddy.
Dale, I really appreciate it. Thank you so much. I love our interviews always.
All right, well, we're going to do it again.
Great, I'm ready.
So thank you, my trading warrior brother. Everyone's thanking you. Laura's thanking you. Jorge, everyone's thanking you. Check it out. You have any kind of trials for your newsletter or no?
We did one. We did one a couple months ago, the first time ever. What I'll do is, if any of you or anyone that's listening right now, if they just send me an email on my contact page on the website.
Yeah.
If they send me an email and say, hey, I heard you on Dale, I'll send them a 30-day free trial.
Oh, what a nice thing. Okay, so Christmas comes early from Larry Tentarelli. If you want a 30-day trial, just go to his website and say that you saw him on Face, and
we'll send them out.
Check him out for a month.
Yeah, we'll send them out the link right away.
Well, thanks for your generosity, Larry. Thank you very much.
Thank you, Dale. My pleasure.
Good hunting, brother.
You too, my friend.
All right, so that's a wrap, everyone. See you tomorrow. And remember, don't just count your equities and your issues and your barrels and your bullion and your crypto. Count your blessings, and good hunting the rest of the day. You could be with the team on Morning Edge as a member in 15 minutes. That's a wrap for us. Adios, everyone. See you, Laura, Richard, Ingmar, AJ. Take it easy.